Hey guys, Bill Soriano from Pittsburgh. Sunday about 9 a.m. on 4/5, 2020 here we're in. And I just made that video on the money management rules for the three trades that we're going to be taking, the 1 hour date, the 4 hour dare, and the 1 hour FIBO quantum trade. So I wanted to go through some charts here to show you. I don't have the sheets with all the rules made up for each trade, but I did go over the money management rules with you on the previous video, and that's probably the most important video anyway. But as we go through these charts here, I'm going to talk about some of the rules that we're following as we take these trades, and then I'll get all the documentation ready and put that in the group so that you have a list of the actual rules written down as well. So you can follow along here, and I'll tell you kind of why we do these certain things that we do here. So let me just make sure that. Okay, so let's just look at, so here we have our chart set up here, and I have the FIBO quantum indicator installed on the chart here. So that's why these lines are showing up. It's showing the sell entry here, take profit, there's stop loss for the buy entry up here. So all the lines are plotted on here for you. Now what we're going to do is for the 1 hour dare trades, the 1 hour FIBO trades, what we're going to do is our first thing is we're going to look on the 4 hour chart here. So we're on UJ 4 hour chart, and we want to check the market direction. So that's our first thing. We want to check the trend. So in order to do that, when we get a buy signal, we're going to take all our trades on the 1 hour chart. We know that. But before we take a trade, we have to check the 4 hour chart to make sure that the market direction is the way we want it to go. So basically, for a long position, we want to make sure that the price is above the 200-day, which is the blue line here. That's the 200-day EMA. We use the exponential moving averages. We also want to make sure that the 50-day, which is the red line, is above that 200-day as well. So we want to make sure that that hasn't given us any signals, or that the trend's about to stop, or we need that 50-day for a confirmation. They call that, when the 50-day crosses the 200, they call that the golden cross. When it crosses up, and when it crosses down, they call that a death cross, because they think the market's going to drop. It doesn't always happen like that. But at the time we take the trade, we want to check and see, is price above the 200-day? If we want to take a long position, price has to be above the 200-day, and the 50-day has to be above the 200-day. If we want to take a short position, just the opposite, price has to be below the 200-day, and the 50-day has to be below the 200-day. So what happens is this thing crosses here. As you see here, right now, price closed above on Friday, market closed. It closed above the 200-day just slightly, okay? So you wouldn't take any short trades. So you see here, the market direction is down. Price is below the 200-day. The 50-day is below the 200-day. Right here, it pops up above, so at that point, we wouldn't take any short trades. Now, what happens is here, then price climbs above the 200-day for quite a while here. At this point here, we wouldn't take any short trades, but we also wouldn't take any long trades, because in order to move from taking the direction from short to long, or from sell to buy, we have to get this cross here of the 50-day over the 200-day. That doesn't happen till right here. So right here is where we would be able to start taking long trades. This area here, we wouldn't take any trades at all, right? So this area here, we would be looking for sales or short trades, except if we would have looked when this popped up above the 200-day here, right? And then this area from here to about here, we wouldn't take any trades. And then once we got to here, once we got this golden cross here of the 50 over the 200, then we could start looking for buys. That would confirm our long positions. Then right here, it's going to drop below the 200-day, right? We wouldn't take anything because the 50-day is still up here above the 200-day. So we'd have to wait for the death cross now to start taking shorts. So this is kind of moving, up and down with the above and then below, and then the 50 days cross, and so it's a little bit convoluted right now. But anyway, at the time here on the 1 hour chart, we got this. Now the other thing is on the you see here on the 1 hour chart, I have these white blocks. So these are the times of the day when you wouldn't want to take a new trade. If you're already in a trade, that's fine. You're not going to get out. But this is basically from 12 p.m. Eastern Time until 8 p.m. Eastern Time. And I may relax that to 7 p.m. Eastern Time. So there's going to be a period of 7 to 8 hours where you would not open a new trade. And that's just because there's not enough volume in the market for us to open that new trade, for it to move either way, whether it's up or down. There's just not enough volume because at 12 o'clock, the London session closes. Even though U.S. is still open, there's not enough volume. And then you want to wait till 8 p.m. where the Tokyo session opens, okay? So these white blocks here indicate areas where we wouldn't take a new trade, okay? And that's 12 p.m. Eastern Time to 8 p.m. Eastern Time. Now, I may change that to 7 p.m. instead of 8 p.m. so that we may be able to start taking trades again at 7 p.m., okay? But from 12 p.m. to 7 or 8 p.m. Eastern Time, no new trades are open, okay? So that's what that shows here. So we wouldn't take these trades here. However, right here, we do get a signal to get in UJ. And you can see here, we get a drop of about 25, 26 pips. So at this point, depending on where we're at, it then reverses on us, right? We're down by 47 pips. And then we get a move down again where we can get some profit and lock it in, okay? Now you see here the sell entry was here. The stop loss is up here. This is a FIBO trade, okay? So you have to have the indicator for this. But we're risking 75 pips on that trade, okay? So we would set our stop up here, and then we use the take profit targets that they have for us right in here. You have to make it smaller to actually see them. And here they are right here. So we use those to decide where to get out of the trade. Okay, that's just, I just want to show you some things here, and then I'm going to talk about some of the rules as well. So this is EU. EU right now is currently in a downtrend, right? Price is below the 50-day, the 200-day, which is the blue line, and the 50-day, which is the red line, is also below the 200-day. Now, the other thing you're going to look for when we pull up this 4-hour chart to check each of the currencies for the trend, we also have that 4-hour dare trade, right? And so what we're looking for on that is we're looking for recent crosses of the 50-day and the 200. So this isn't so recent, so we wouldn't really want to look at this. But one of our trading strategies is going to go off of looking to get in a trade after you get this cross. But we want to do it when it's a recent cross. This isn't so recent, okay? But we check that as well as we're looking at these 4-hour charts. And again, we'll have more information on that. I'll make a separate video for each particular trade along with the rules to get into the trade, okay? But this is in a downtrend. And as you see here, we did, I believe, take a trade on Friday, if I'm not mistaken. Right down here, we had a sell entry, and we did get in this a little bit early. We got a little bit better position right here, and it did immediately move against us. But now it looks like it's starting to move back in the direction we want it to move, right? Now this is EJ. We go to the 4-hour chart on EJ. We do have a recent cross here. So what that means is we can look for a actually look for a dare trade, but we don't have a very good setup for one right now. Actually, we did have one, but I'm going to go into that in another video. So anyway, we're in a downtrend. So if we go back and we look at the 1-hour chart, right, we had this sell entry right in this area here. Okay, so we want to check to see here at this time. Let's put this line right here. That's where we get the sell entry, right? If we look at the 4-hour chart, okay, at that time, right here, price is below the 200-day, and the 50-day is now below the 200-day, okay? So we would take that trade right there, right? We would be able to take that trade, okay? It does move in our favor by about 46 pips, okay? So now, depending on how we're setting our trailing stop, as this moves against us, we may get out with a small gain, 5 to 10 pips, right? Now, one of the rules with the FIBO indicator is that you're only going to take one trade per signal. So this is the signal. You see this line here? That's the area of the sell signal. Okay, so before that, you wouldn't get in. After that, you wouldn't get in, right? So we're looking for sells. We're looking for short positions because the global trend on the 4-hour chart is down at that point right there. Okay. So what that rule means is if you take this position right here and you get in this trade, and then it moves back up, you stay in, then it moves back down, you don't take a second position here. Okay. However, though, if you get out of the trade, like we may have done, right? Because when this moves in our favor, we may have set a trailing stop at +5 or break even. We may have gotten out of the trade. So if we got out of the trade, then we are allowed to get back in the trade since we don't have a trade at that point, right? So what we do is we wait for this to close above this sell entry line. We got to wait for it to close above there. We got to wait for the 1-hour candle to close. And then when it drops back down below again, we can get back in. So it drops back down below. We're up by 35 pips. We might have set a stop again to get out at +5 or break even, right? Goes back up again. And then finally it drops back through again. And it goes all the way down to take profit 3. You see, this is 1, 2, 3. And again, we would have a trailing stop rule in place. Like we said, you'd have an exit strategy, a trailing stop rule here as you're going down. What you would do once it gets to take profit 1, what you would do when it gets to 2, and then of course at 3 you would get out of the trade. Okay, that's probably where you'll set your initial take profit at take profit level 3. But then you could decide to get out of the trade at any point here between take profit 1 and take profit 3, right? It's up to you. You have to set that strategy. But this is a good trade. This was a good trade, a winning trade with the FIBO indicator, even though we may have gotten in 3 different trades, depending on how we set our trailing stop, right? Let's go to another one here. I think it's USD CAD. So if we go to the 4-hour chart, right, we see this has been in a uptrend for a while, right? Price has been above the 200-day. The 50-day has been above the 200-day. So it's been in a straight uptrend for a while here, right? We can go back a little further to see it's been quite a while. It's been in an uptrend, okay? So we would only be looking for long positions on this pair on the 1-hour chart. So what we would do here, if we go back, we see some trades here that, right here we get a trade. We get an entry right here, right, with the FIBO indicator. This is the FIBO indicator. Like I said, most of our trades that we find are going to be found using the FIBO quantum indicator. However, we will have some trades with the 1-hour date and the 4-hour dare as well. This makes a big move up, right? Take profit 1, take profit 2, 377 pips at the top here. So you're probably out somewhere around in between here, take profit 1 or 2, depending on what you do there, right? Then over here, we get another buy entry, right? So we get in here. It moves up. We're up 64 pips at this point. So we're obviously going to use our trailing stop, and we're going to set it. Maybe we're going to, lock in 5 pips, 10 pips, or break even, whatever. It's going to come down here. We're going to get stopped out, right? We're going to get stopped back out of that with a small gain, okay? We're going to get back in again over here. Again, we're going to be up, 40, 50 pips. We're going to lock in either a break even +5, +10. We're going to get stopped out again, right? And then it's going to drop down after that. We don't want to be in that trade, okay? Because with that trade, your initial stop loss is 212 points away, 212 pips away, okay? So that's a very small lot size that you're taking on that trade if you're on your live account. And also, guys, on your live account, depending on how much money you have in there, there may be some trades that you just can't take because the risk is too many pips, right? If you only have a $100 account, each pip, right, is 10 cents. So, a 200 pip trade you wouldn't be able to risk at on one single trade with a $100 account. That would be more than 3%, right? If you only have $100 in your account, basically you're only supposed to risk $3, okay? Now for those smaller accounts, you may have to move that, risk level up a little bit because you just won't be able to get in very many trades, okay? That's why it's best if you have at least $1,000 to start a trading account. However, you can get started with 100 or 500, and there's just some trades that you won't be able to take because the number of pips that you have to risk is just too great. But there will be trades that you'll find that you'll be able to take that are within your risk guidelines. This may not be one of them because this has an initial stop is 213 pips. But that's why it's so important, guys, that when we're up and we have this profit, that we lock something in, or we at least set it to break even, so then when it does go against us, we don't lose money. We get out break even, right? We get back in over here. We're up 37 pips. We set a stop at break even. It drops down. Oh, we're out again at break even. Okay. Let's look at another one here. We're going to look at GU. GU, right? We're going to go to 4-hour chart. We're going to say, okay, which way is it going? 4-hour chart for a while here. This has been in a downtrend, right? Price is below the 200-day, the 50 days below the 200-day. However, there are some places here on the 4-hour chart where the price does pop back above the 200-day. So what happens is when we're trading live, if we get a trade signal, we go over here and we look, the price is above the 200-day, and we wouldn't want to sell. We get a sell signal. If the price did pop above the 200-day, we wouldn't take that trade. But for the most part, with GU here, we're looking for shorts. We're looking for short positions. Back to this period here, you see how, there's a couple times when price pops above the 200-day, we wouldn't take any positions at all. We wouldn't take longs because the 50-day hasn't crossed the 200-day up yet. So this area here, we just don't take any trades, okay? Then the price moves back down below the 200-day. The 50 is still down below the 200-day, right? So we could take the short positions at that point, okay? So let's go to the 1-hour chart now. We're going to look for our short positions. Okay, what do we get? We really don't have many here. We just had one on Friday here, right? Boom, right through. It breaks right through here and drops down to take profit too, 125 pips away. Okay, so a very good trade there with GU, right? Let's see, I think USD CHF we want to look at. If we go to the 4-hour chart here, we're going to see that, let's see here, we don't have the right indicators up there. 4-hour chart here, we see that price is currently above the 200-day, here, and the 50 days above the 200-day. So right here, we'd be looking for our long positions right now. When we open up on, Monday, tonight at 5 p.m. Eastern time, we'd be looking for long positions, okay? There were some times here over here where we were in a downtrend. We would be looking for shorts, right? Price is below the 200-day, the 50 days below the 200-day. Right here, price moves above the 200-day, but the 50-day hasn't moved up yet, so we can't take any trades. Then right here, we'd be able to take some long positions, right? Until we hit here, price goes back below the 200-day, we'd be looking for short positions, but not until the 50 made the death cross, which it never did. Okay, so no trades at all here, and then right here where it pops back above the 200-day price and the 50-day is still above the 200-day, we could take longs. So if we look on the 1-hour chart, we had a buy entry right here, right? Buy entry right here, pops up, we're up a little bit, goes down, goes against us about 20 pips, then we move up, right? We're up about 77 pips here, we'd probably lock something in. Boom, it drops down, we'd probably get out with a small profit, right? Closes down below the buy entry again, and we can get back in if we want to right here. And it moves up a little bit better for us. We can get another small profit, with a trailing stop, right? So a lot of times you get out because of your trailing stop, okay? And sometimes after you get out with that smaller profit, maybe it's even break even, 5, 10, 25 pips. You may you may get mad when you see the price continues upward. And now, you could have been up 184 pips on this trade and had a lot of money in your account. But, we just can't risk that when it starts to move back like that it's going to go against us so much that now we're down here at a loss. And then all of a sudden we get stopped out here, right? So now, if we're not doing a trailing stop, instead of being up 77, maybe getting a 25 pip gain, now we come down here and we get stopped out with an 80 pip loss. Okay? So that's a swing of 150 pips from here to here. And like I said, instead of a 25 pip gain because we set a trailing stop, this may have continued to go against us and we could have got stopped out with an 80 pip loss. In this case, it didn't. But we don't know that, right? Hindsight's 20/20, but we don't know that when we're trading live. Okay? That's why it's so important to set these trailing stops and lock in some profit instead of losing. Because you know what, guys? If you don't have many losing trades, then it really doesn't matter if you're making smaller profits on the winning trades, right? Because you're not losing. But if you take one big loss, then that's gonna cause your account to take a hit. Okay, let's look for another one here. We have AJ. And again, if we go to the 4-hour chart, we want to check the market direction. We also want to see if there's a recent cross of the 50 and 200 day, because that would possibly set us up to start looking for a 4-hour dare trade. Okay, there was no recent cross here though. If we pull back here, we see it's been quite a while, and AJ's been in a downtrend, or we would be taking shorts because price has been below the 200 day, which is the blue line, and the 50 day has been below the 200 day as well. Okay, so we were looking for short positions in AJ. And I don't know why that keeps coming on because the market's closed, but to figure that out. But anyway, if we go back here, see if we have some sell entries anywhere. It looks like back here quite a while, a few days back, we get a sell entry right here. Okay. And again, it appears that, we're up like 72 pips. So again, we may have gotten stopped out with a 25 pip gain. We may have re-entered, goes against us a little bit here, right? Stop loss on this one is almost 200 pips away again, but then it does make its move down 475 pips. So, again, if you're the kind of person that likes to hold on to trades, you'll get more of these big gains like this, but you'll also take more big losses where you get stopped out at the maximum amount. If you're not taking that trailing stop. Also, what you'll find is it also matters where you're at in your trading account and during the day. If you're already up, if you already won 2 trades and you're up $100 for the day, you may give yourself a little bit more leeway. If this is your, maybe you won 2 trades, right? You're up $100. This is your 3rd trade. You might say, hey, I'm up $100. I'm going to let this run a little bit. I'm going to see what happens here, right? Okay, so that's kind of something you can take into account, but that's the only time you would consider, breaking your rules like that or relaxing your rules like that is when you're already up. Okay, but if you've taken 2 losses or you already taken a loss for the day, you have to really watch this. And again, it gives you an opportunity to get back in this trade. Okay, it gives you an opportunity to get back in. But again, you're up 106 pips here. You might just take those 106 pips and get out. Or you might set your trailing stop. And again, you get another 25, 30 pip, 30 pip gain. But then what happens is it drops 484 pips. So, when you're trading with your live account and it's your money, you got to watch it, guys. You have to watch it. So you have to have a strategy in place, whatever it is. You have to come up with that yourself. That's not something I can tell you. I could tell you what mine might be, and mine changes as time goes on as well. Because as I see how trades pan out, I see, hey, a lot of times maybe I'll see, that in the market, I'm taking these smaller profits because I'm setting a trailing stop, and then it's going ahead and moving 484 pips. So I might relax my rules a little bit, but I'm still going to follow my rules. Yeah, that's something that each individual trader has to come up with on their own. Okay, let's look at CAD, JPY. Again, we look at the 4-hour chart, right? We want to see if there's been a recent cross, a golden cross or a death cross, right? The golden cross is when the 50 crosses the 200 on the way up. That means the market's going to go up, hopefully. That's what they think. And then when it crosses on the way down, that's the death cross, meaning the market's going down. Well, this has been down since back here. It made a cross right here, so there's no recent cross. So if there's not a recent cross on the 4-hour chart, that means that we have no opportunities right now to set up some 4-hour dare trades. We don't have anything to look at as far as the 4-hour dare trade. So now we just look and we see, hey, trend is down. We're looking for shorts on the 1-hour chart, right? The shorts could be in the form of the FIBO quantum trade, or it could be the 1-hour day trade, okay? Most of your 1-hour day trades that I found, though, come during the Asian session. And again, all the rules will be posted for each one. I'll make a separate video for each trade, and there'll be a separate sheet for the rules for each trade. But right now, I'm just trying to give you an idea of what's going on here. Remember, these white boxes are times when we don't trade, right? This is 12 p.m. Eastern Time to 8 p.m. Eastern Time. We're probably going to change that back to 7. So there's probably going to be a 7-hour period where you don't take any new trades. 12 p.m. Eastern Time to 7 p.m. Eastern Time. There's just not enough volume in the market for you to open a new position. You just wait. You might lose some trades. You might miss taking some opportunities that would pan out good, but you'll also miss some that would have gone against you. We're looking for shorts. Right here, we wouldn't take a trade, right? Right here, this does pop below. So we probably would get in that trade, right? Our stop loss is going to be 800 pips away on CJ. So this is a big, I'm sorry, that's 80 pips. What am I saying? That's 84 pips away. I'm sorry. Our stop loss is 84 pips away. We don't get stopped out. It moves about 40 pips against us. And then it moves down here almost to take profit 1, which is an 80 pip gain. At that point, we would probably lock something in, probably 25 pips, and we would be out with a 25 pip gain. It then comes up here, closes back up above the sell signal, and that gives us another opportunity to get in right here, right? Again, it goes against us, but then it drops down through take profit 1, and would have an opportunity to just take our money and take profit 1. Probably if it's the second trade, if you had to get out of one trade already and then you got in a second trade with the same signal, you probably want to just get out and take profit 1 here with a 78 pip gain. A lot of times, guys, when you're on your live trading account and you see you're up 78 pips, you're probably just going to take the profit, okay? Especially if you already had one loss, and this is your second or your third trade, and you had 1 or 2 losses before it, okay? So that's something that you have to determine, like I said. We're going to look at AN now, AUD, right? 4-hour chart, we look at that. Okay, we look for recent crosses. This really isn't recent, right? It's not that far back, but it's not recent. It's currently in a downtrend. Price is currently below the 200-day, and the 50-day is still below the 200-day. We have a couple areas here where price does pop above the 200-day. So if we would be looking to take a trade and we come over to 4-hour chart, if we're looking to take a sell trade and price is above the 200-day, we wouldn't take that trade, okay? We also wouldn't take a buy trade as well. Why? Because at this point, the 50-day is still below the 200-day. So we wouldn't switch from a sell to a buy until first price goes above the 200-day, and then the 50-day goes above the 200-day, right? So that's how we do that. So right now we're looking for short positions. We go to the 1-hour chart. Okay. There weren't that many short positions here going back. However, right here on Friday, we see a setup for the 1-hour date trade. So if we make this a little bigger, we see right here that we have what's called a shooting star. This candlestick right here is a shooting star, and it is on both the 20 and 50-day moving average. Let me see here. Hold on one second. So we get the setup here with the shooting star, and again, when we do the training video for the 1 hour day trade, I'll explain how we're basically looking for these bearish or bullish candlestick patterns to form in an area of value, and that area of value we define as the area between the 20 and the 50-day moving average. And that's actually why on the hourly chart I don't have the 200-day here, because the 200-day is used to determine the trend, but we do that on the 4-hour chart, right? We determine the trend on the 4-hour chart, so that's why the 200-day is on the 4-hour chart. So on the 2-hour day, I just have on the 4-hour chart, I'm sorry, I just have the 200-day and the 50-day, because we use those two to determine the global trend, and we also use those two for the 4-hour dare trades. On the 1-hour chart, I just have the 50-day and the 20-day, because we use that 50 and 20-day to determine the area of value for the 1-hour day trades. We don't really need the 50 and 20-day at all for the FIBO trades, right? But for the 1-hour day trade, we need this, so that's why we leave it on the 1-hour chart here. And right here, we get a classic, a classic shooting star, and that is a bearish candlestick pattern. It's just a one candle pattern. Some of the candlestick patterns are one candles, like the shooting star or the hammer. If the body was up here at the top, the hammer, of course, is a bullish indicator. And then some are two candlestick patterns, like a bullish or a bearish engulfing, which I've showed you in other videos when we look at the charts in the group on why we took those 1-hour date trades. Okay, and I was calling that like a candlestick area of value trade, but we've actually renamed it to a 1-hour date trade, right? That makes the word date actually stands for market direction, right? Area of value, which is the moving averages, and then the trigger, which is the bullish or bearish candlestick pattern, and then the entry. And the entry is different in this trade, where the next candlestick, when you get this signal candle here, the next candle has to break the low if you're going short. The next candle has to break the low for you to enter the trade. If it doesn't break the low, then you don't take that trade. And this trade has worked out, would work out for us, where we'd be down like 47 pips right now. Not down, we'd have a 47 pip profit right now. And we'd be looking to lock some of that in as we open up here to trade later today at 5 p.m. Eastern Time. So one more chart to look at here, and then we're going to finish up for the day. CHF-JPY, when we look at the 4-hour chart here, we have a recent death cross here. This is a recent one, okay? Just happened on Friday. So this tells us that we could start looking for a 4-hour dare trade. And basically what we're going to do here is, there's going to be rules for this, but this would be taken on the 4-hour chart. So again, there'll be fewer of these, and the risk is going to be more. Okay, but there'll be a certain way to determine the risk, where you set your initial stop loss, and then also another way to determine where you take your profit. Okay, but this is starting to set up here for a 4-hour dare trade, and we'll go into that, on another video. But that's why we look at this. We get the recent cross. And then for the 1-hour date trade and the 1-hour FIBO trade, we're looking for shorts right now, just currently here, right? Now, again, right here, we would be looking for shorts in the market, right? Price below the 200-day, 50 days below the 200-day. But then there's these areas where the candles pop up above the 200-day. So we wouldn't take any trade there. Same thing here. It goes way up above the 200-day. No trading, no trading. And then right here, it's above the 200-day, and the 50 makes the golden cross. So from this area here until about right here, we're looking for long positions. And then again, we're looking for short positions. So I don't know if we had any here on the H1 chart. Right here, we had a very good trade set up here. Short position. Of course, right here, we wouldn't take this trade. Why? Because it's in the white box. That means it's between 12 p.m. Eastern Time and 8 p.m. Eastern Time. Wouldn't take that trade. However, it moves back, right? And we would take the trade right here. Take the trade right here. Boom. Goes through take profit 1. So you probably have a pretty good stop in place here where you get about 50, 60 pips here when it pulls back against you and you're out of the trade. Now, if you were in a position to stay in this trade a little bit longer, you could see you're up 87 pips. You look back at your trade. Now you're only up 16 pips. You're getting worried, right? Right? But then it goes ahead and it drops 179 pips. And you would definitely be out to take profit 3 with 160 pip gain. So I just wanted to go through some charts today, guys, and that's what I did. And then in the next 3 videos, I'm going to make a separate video for each one of the trading strategies, right? The 1 hour date, the 4 hour dare, and the 1 hour FIBO. So I'm going to make a separate video for each one, right? I'm going to create a rule sheet. I'm going to have that, up so we can go over it when we're making a video, during the video. And I'm also going to hopefully be able to show you lots of examples. I know I'll have examples of the FIBO trades because a lot of those come up during the day. And I already have examples of the 1 hour day trade that's in the group. What I'm worried about is the 4 hour dare trades because we're going to see a lot less of them. But they'll be good trades as well. And hopefully I'll have some examples to show you. But in any rate, I'll be making 3 more videos right away here. A video for each of the 3 trading strategies, and I also have a Word document made up with all the rules, just like I did with the money management rules. So again, Bill Soriano from Pittsburgh, and let's make it a great day trading Forex.